All right. Good morning, everybody. We have 53 participants on, and we'd just like to thank you all for being here today. We have Steve Tabrizi, who's going to take a little bit of time to give us a little bit of an overview and an update on the economic outlook for the Ottawa marketplace. As you all know, Steve frequents all the economy and financial things that come through the pipeline and so forth. So he's our go-to guy. So we're really appreciate Steve being here. Just a couple of things that I'd like from you guys is Steve's session is going to take about 25 to 30 minutes for his presentation. If you could kindly click on the participants box or the chat box and just put your hand up. So put your virtual hand up. I'll be able to see that. At the end of the 25 to 30 minutes, then I'll come off, open your mics, and you guys can ask your questions to Steve. So without further ado, Steve Tabrizi, thank you for being here. We've got 60 people on that want to hear from you. So,
good morning, everyone. Thank you for being here. So I'm not sure how many people are from the company. There are some clients outside of the company that are on this Zoom call. So I'm going to start a little bit, talk about who I am and the company, and then we'll take it further to talk about the economy. So my name is Steve Tabrizi. I'm the Chief Operating Officer with the Hallmark Group of the company. Remax Hallmark operate in 5 regions in Ontario with over 1,700 agents. Historically, we do about 22,000 transactions in the past 3 years. We do about 1 transaction every 23 minutes. And if you convert that to the volume, we are about over $1 billion of the volume. Precisely last year we were about 1.1. So let's dive in to talk about Ottawa. So we're going to focus about the trends that happened in Ottawa for the past probably 5 years. We've been operating in Ottawa since April of 2016. Some of you are born, raised in Ottawa, some of you are not. So let's understand what is the city of Ottawa fast facts. Ottawa is a part of the G8 city. Canada is a part of the G8 country. So in order to be part of a G8 city, there are certain requirements among the G8 country. It has to be a cosmopolitan city with a certain urban centers, certain GDP, and certain population. It's the fourth largest city by the population. Last year was more than $40 billion in GDP. It's a hub of the technology in Canada, employs over about 70,000 jobs. I'm not sure if you heard, as of yesterday, Shopify is the #1 company in terms of the value in Canada, surpassed Royal Bank of Canada. Their stock share is over $1,000. There are more than 25,000 employers in Ottawa and more than 500,000 jobs. Almost 22% of the job sector is public sector, federal, and city. And that's one of the stability that city of Ottawa brings to the economy, its own economy. So the second fastest growing city in 2019 after London, Ontario, population grew by 2.3%. Average population growth in city across Canada has been anywhere from about 1.2 to 1.5. Ottawa is leading. Ottawa last year surpassed the 1 million in terms of the population. And as we talked, 22% of the workforce in the public sector. Unemployment rate in 2019 was 4.3. Currently with the COVID situation, it's about 2% higher than it was supposed to be. So sitting at about 6.5 to 7. There is a tremendous, huge labor shortage in Ottawa due to multiple massive projects that federal government and province took. One of them, the primary project was LRT in Ottawa. Average household income in Ottawa is among the top in Canada. Last year was about $110,000. I couldn't believe about this map, but when I was doing my research, I learned about it. I don't know how many of you know or not. Ottawa, in terms of the square kilometers, it's bigger than combined of the Toronto, Montreal, Edmonton, and Calgary. And that's one of the reasons the Ottawa, it is aiming for being one of the mega cosmopolitan center and a large urban center because has the ability of the growth and multi parts of the lands are available surrounding Ottawa. So housing trend pre-COVID-19 in Ottawa, what happened? House prices became a little bit less affordable because in the last 4 years is a continuous growth. Softening demand for single family because even in Ottawa, the single family homes, they were becoming less affordable. Larger condo suite, low interest rate, influence of the foreign buyers last year, which caused a double-digit growth in the Ottawa real estate market. Foreign buyers are investing in Ottawa because the rate of return and a cap rate, it's quite above the average in Canada. Interprovincial migration, many people due to the stability of the job and higher pay were moving to Ottawa. Ottawa is a center in terms of the healthcare and also education. It's ranked among the top cities in Canada. So by mid-March of this year, 60% of the listing that they were on the OREP site or on MLS portal, they had multiple offer. Pre-COVID-19, condo market in Ottawa was picking up the momentum, was very little supply because the developer, they were just re-engaging back in Ottawa market, building multiple projects. Condo prices accelerated since 2017, and it was coming back to be around the era of the 2012. Early 2019, there was a prediction that the house prices in Ottawa only goes by 4%. That demonstrates that how most of the prediction are incorrect. By the end of the 2019, the house prices in Ottawa grew by about 12%. For the first time this year, the first quarter of the 2020, aggregate home prices in Ottawa, which is the medium average prices, passed the $500,000, $500,000 in Q1 of the 2020. So with all the history that we just talked about, so look at it, how beautiful the Ottawa is, the perfect ground for people that have almost about $100,000, $110,000 household income. They can afford to buy in the city of Ottawa. If you look at this survey that was done by Abacus Data, is a beautiful survey. It shows almost about 60% of the people fall in that category of that income, which they will qualify and can afford to have a single detached home in the city of Ottawa. So new built homes in Ottawa, although there is a tremendous demand, but the supply is falling. In 2019, new homes only could complete 5,323 homes. This year, the projection was supposed to be over 6,000 homes, and most of the pre-construction site, there were lineup, and people were just basically buying multiple projects, and investors from mostly Toronto and Vancouver also were heavily investing in the city of Ottawa. Still, those projects are quite affordable, and still people are investing in those multiple projects. So new construction absorbed average price in Ottawa by October of the last year is almost $652,000. And if you look at this graph from, if you want to take a look at it, probably from the October of the 2016, from almost about a $535,000 sitting at now about $652,000. In a 4 years average, almost about 22% growth, which is about 6%, 5.5% on annual basis. Vacancy rate in Ottawa is quite low in terms of the rental. It's sitting anywhere below 2% at the current moment. And the average rent is a minimum for a smaller 1-bedroom, older building, anywhere from about $1,400 as high as going to about $1,800 for a 1-bedroom, and a 2-bedroom anywhere from about $1,800 to $2,200 a month. So COVID crisis happened. So in any crisis, few things happen. The first thing that happened in the COVID crisis was uncertainty. People didn't know what will happen. People didn't know how long it's going to last. And usually when the uncertainty happened in any crisis, the market collapsed, the market crashed. And the first crash of the market was the stock market. So the stock market tumbled down heavily by almost anywhere between about 30 to 40%. And we went back to the era of the almost about 2015. And usually when the market collapses, there are reactions. And the reaction this time, there were positive reaction from the federal and provincial government, because everybody basically embraced how they can help and assist the consumers in these crises. So let's take a look at also an economic differences between the COVID-19 and 2008 crisis. In COVID-19, it's artificial. Basically, it is something that is forced by the government versus the sudden. In 2008, October of 2008, we woke up and a Lehman Brothers was bankrupt. Federal government, provincial government, US government, they failed to react quickly. And there was a sudden shortage of the liquidity on the market. The banks, they were not lending money. And it wasn't about a general average of the consumers, what is happening on the market. It was about a specific sector, which was mostly lending sector and financial institution with respect to their bad practice. In 2008, duration of the crisis took almost about 17 months to recover, because it took almost 17 months, probably about a first year, the policy maker to make a decision how they are willing to stimulate, how they are willing to pay the packages and save companies and bring it back. So, which brings us to the third point, which is the policies. So the policies in 2008, they were quite scattered all over the place, versus the policies that we see right now across the globe are pretty much united. Pretty much everybody talks about the same thing, such as payroll, such as defer of the taxes, such as defer of the mortgage. Yes, governments are printing the money because that's the only solution to basically make it still be an artificial impact, rather than trying to find the solution. They know what is the solution. The solution is basically making sure the number one element in any economy is employment, to save the employers and to save the employees. So impact of the quarantine on economy. So what happened? Let's talk about the mindset of the consumers. So consumption habit. Imagine they tell all of us that we can't go out. We receive an order from the province that we are not supposed to go out. The shops are closed. We are supposed to work from home. That consumption habit that we used to go out, we used to shop the way we wanted, we used to go to a restaurant, stopped. So it's impacted the hospitality business tremendously. Services considered non-essential. So the provincial government came up with the list of what is essential, what is non-essential. Pretty much almost about 70% of the services that they were in the province, they become non-essential. And all those services are related to chain of the production and services, work availability, unemployment. So many of the business sector, they couldn't cope with allowing their employers to stay at home and get paid and not be productive. Therefore, they had to lay them off temporarily. So cash flow became a major issue for many businesses, small, medium-sized, large companies. Large companies, as such as even banks, they had to immediately implement emergency plan to save the cash flow in order to be sustainable for the month of the recovery coming back. Immigration has been a big element of the Canadian growth. So there are pent-up application in the system in terms of the people who were supposed to arrive in the first quarter on a Canadian soil. They're all now on a waiting plat and basically waiting when the door will open. Travel industry, you name it, everything, the whole entire society became a completely a different sort of the habit that we had to embrace. So obviously it had a mindset impact on Canadians. So Canadian state of the mind, almost after about 4 weeks, this whole crisis started about March 9th, almost about a week before March break. And everybody basically thought, okay, it's going to last 2 to 3 months. Still, the survey shows that the Canadian, they will basically says, okay, if we quarantine ourselves for the next 2-3 months, we can basically flatten the curve. And if you take a look at it, the first emergency order was issued on March 15. And today we are almost mid-April, mid-May, and it's basically almost 2 months that we have managed to flatten the curve, and the government is talking about reopening. And the federal government yesterday talked about the reopening of the 5-stage. Provincial government is talking about reopening of the 3 stages. And many other provinces, they already open. And 3 provinces also, they reported there are no rate of infection and no rate of mortality in the last week. So how worried are Canadians? So this survey was done right at the beginning. And if you sum it up, you will see only 32% were a little worried or not worried at all. So basically 70% of the consumers, they said, we are worried about our health, we are worried about our economy, we're worried about our job, we're worried about everything that's happening in the future in this country. Now, they did the same thing through the businesses. The businesses, as you can see, the retail businesses, hospitality business, the risk barometer was higher than anybody else. They basically felt that maybe they will not be able to recover and come back to the business. It was the same general feeling about the total economy. Natural resources, oil businesses, they came into the 2020 with the already risk barometer because they basically were worried that they are not going to recover even in 2020, mostly due to the oil prices and mostly to do the transportation of the oil to the shore to make the Canadian oil system to become in a global market and become more competitive. So government started building the bridge. I don't go through the details of how much money is out there. It's one of the biggest change that the Canadian government announced. Initially, they announced they only offered 10% of subsidy of the wages. As soon as the first country was Denmark, and then England, up to almost 80%, Canadian government embraced that idea and then realized that that's the only solution to make sure that the employees are protected and the companies, they can survive. This measure is only for 3 months. A couple of days ago, they asked the Prime Minister, would they extend this measure? And I do believe they will extend this measure. They probably will scale it down. They will probably go through the same phases of the reopening of the economy. Maybe the next subsidy after the 3 months will be 50%, and maybe it will continue for 10% at the bottom part of it for the 12 months coming. And they also just announced how they can survive, how they can save the retail industry and hospitality. One of the biggest challenge for the retail business and hospitality is a commercial rent. So the government has announced a commercial rent relief, which basically is the collective partnership with all the 3 elements between the tenant, the landlord, and the government. Most landlords, they have to comply with a 25% rent reduction, and a tenant, they will pay the 25%, and then also 55% will be subsidized for a certain period of the time, anywhere between 3 to 5 months, so they can reopen their businesses and they can survive. But it's interestingly, Canadian society as a whole is really embracing this COVID-19 perfectly and demonstrating that how Canadians are together. And most landlords are, before even the emergency relief fund, they are realizing that they have to help the tenant, because if they don't help the tenant, that business will be wiped out, and recovering the economy will be probably 3 times more difficult than helping and perhaps deferring that payment to the end of the lease term. So borrowing rate is never been better. 4 times dropped. The prime rate is literally sitting at almost the zero. The banks, in terms of liquidity, there is tremendous amount of liquidity and cash available out there. Federal government through the CMHC and ensuring many of the mortgages at the bank book, and they basically allow them to have access to additional fund to lend it. We haven't noticed through our Capital Home Lending and a TD Bank partners any or major decline in the application, and most applications are getting processed pretty fast, and the banks are quite aggressive in terms of the lending. In fact, actually, the bank also just started to dropping the 5 years fixed rate term, and the variable rate has been tremendous. The variable rates are anywhere from about 2.2 to 2.4. So look at the GDP. Look at how important the real estate industry is. Real estate industry last year represented $254 billion to the Canadian economy. And if you add the construction to it, we almost represent about a 25% of the total GDP of the Canada, which is a $2 trillion. So it is very important for the Canadian economy to help the real estate industry as an overall industry, because there are at least about maybe anywhere between 30 to 50 other industries are connected and related to the real estate industry. So we take a look at the market. Everybody initial, because we talk about the market, that the market had a tremendous collapse, and everybody was looking at the stock market, and they were basically saying, okay, if the stock market collapsed, the real estate market should behave the same thing. We take a look at the market and we wanted to see, is it still a balanced market or a seller market or a buyer's market? The number of the inventory in all of our 5 regions is anywhere between about 2 to about 3.5 months. The prices, not only they haven't dropped in major sector of all the 5 regions, they are up anywhere between about 2 to 4%. So we are still on a seller's market. Yes, the number of the listing has dropped, but supply and demand ratio, it's almost still the same pre-COVID-19. We got tremendous demand and we don't have enough supplies. And what happened to the supply? The supply didn't disappear permanently. The supply has disappeared temporarily. We talk about the mindset. Sellers were worried, number one, what's going to happen to the health of my property? The terminology of the health of my property. They were concerned about their families. They were concerned who is coming through their doors. They were concerned maybe also they will not get the price that they wanted. So what happened to the Canadian sellers? They said, look, temporarily, let's take it off the market, which is a good news. These are not desperate sellers. These are smart sellers. Canadian, they have tremendous equity in their household. So it wasn't like a 2008 in financial crisis in US that foreclosure was through the roof. People basically say, look, I don't have any equity in my property. Who cares? Here is the key, Mr. Bank, and I'm out of it. No, Canadian, they took it off. And when we saw almost about 30% of the sellers still stays in the market, that's why the provincial government announced that the real estate sector is an essential part of the economy. And think about it. The Canadian government and a provincial government really think this thoroughly. If we were not truly essential and we were not important to the economy, they would not make us essential. We are essential to the economy. They didn't make us essential because there were some pending deals were happening there, because we are a major part of the contribution to the economy and the GDP and the growth of this country. So now the new survey by Abacus is done after almost the first 2 weeks of the April, after almost 6 weeks. If you recall, 70%, they said before around the March 15, we were worried about our future as an overall under different question. Look at this survey. Almost 70%, 65%, they're saying, look, we will visit. We will go back to the normal life as long as there are proper measures are in place. One example is people have to wear masks. 43% they adopted it. Trusted organization. Clean surface regularly. 72%. Enough room to distance. So Canadians are now from the point of acceptance. They accepted this is the part of the economy. This is the part of the society that we're going to live. So how we can embrace it, how we can re-engage, and how we can really move on with our life. So these surveys are done on a regular basis, and they are basically speaking from the mindset of the Canadian that they are right now, they want to re-engage and back to the society. Look what happened in the last Sunday. They announced by May 4th, the first phase of the opening. Certain businesses are opening. If you look at also the Google mobility activity, you notice probably on the Google mobility activity reports that the activities within the society, traveling, going out for a walk, going for shopping has increased and the activities at home has dropped. That shows that more people are going out. Many companies, they are getting themselves ready how they can recall back their employers and come back to work. They are actually creating a different schedule of the work, 2 days work from home, 3 days from the office, because they want to create that physical distance at a work environment. We are getting ourselves ready to reopen our offices on the same pattern. First phase, we will open some of the offices that we think they are essential to be open based on the geographical location. And then we look at how our agent and how our consumers and how our clients are behaving. And we go to the next phase and a third phase. We'll probably see the entire relief of the businesses and allowed to be open probably by sometimes end of the August. If you take a look at the federal program, which is a 5-phase program, every 2 weeks, one phase is allowed. And by mid-August is the last phase. So what will it take for people to work in an office? Again, 71%. They said, as long as my employer provide me the safe work environment, I will go back to work. So Canadian, they have accepted. They have accepted the health department has done a great job. We are basically flattening the curve. The rate of the mortality is consistent, and almost the rate of the mortality, as much as a sad news, almost by about 80% is confined within senior homes. So that means the community mortality is almost dropping to about a single digit, which is less than 10 people a day. The rate of infection, it's almost sitting at about anywhere between now 350 to 420 people a day, versus that about 2 weeks ago was anywhere between 5 to 550. So also look at the rate of the recovery through the Health Canada's stat. As of last night, almost 76% of the people are recovered. So we went from a ratio of the 65-70% of the people, they were infected, they were positive after the test, 35% recover, now is actually reversing itself. So these charts were provided by OREP. They are great chart. It shows basically they broke it down based on the week through the whole year. And it shows the first week of the March, which was roughly around the 10th week of the year. And if you take a look at the new listing by week, you could see also comparing to 2019 to 2022. A lot of people initially made a huge mistake comparing every week to the same week of the last year, or compared the same month performance comparing after the last year, without understanding that the element and the fundamental of the last year did not exist in the comparison. And one of the biggest elements are the people who are engaged in the game of the real estate. Who are the people who are engaged in the game of the real estate? Buyers and sellers. If the people are sitting on the sideline, you cannot compare this year to the last year. So therefore, when you look at this graph, you will see, oh my God, 2020 dropped everything drastically, but you can see in the last 2 weeks, it's picking up and going back up. So we went, I call it performance activity. We went from 100% activity from the March 15, almost to the first week of April, or maybe even second week of April, we went down almost by 70% activity. So we were performing at a 30-35%. And now we will see a rebound is happening. Next, same pattern for the sold properties. But again, people fail to understand the sold property is in the ratio with the listing. So you cannot compare, oh, we had 3,000 transactions, let's say last year. Now this year we had 1,000 transactions. Oh no, we dropped. You got to really compare it to the correlation of the supplies. So we did our own research, and I got to thank Ansel and Dan. They provided me a lot of details week by week from Ottawa. And we take a look at our stats and we compare them. We wanted a full cycle of the 1 month, which is month of April. Then we said, okay, as soon as we have a 1 month of April, we go week by week and we compare them to the maybe month of March. We didn't want to go to 2019. So we compared them to the month of March. Month of March was a very healthy. We pretty much across all the other 5 regions. We did the same performance and nothing happened. We actually, although the COVID started March 15, performance of the month of March was, call it, let's pre-COVID. If we would have compared up to April 15 versus the March, we would have been down by 70%. So new listing as of end of April is only down by 43%. That means the market is performing at a 57% capacity. Same thing with the condo sales, is performing at a 56% capacity. With the freehold sales, only down 42%. So the whole point with this chart is from a 70% down, we are now down below 50%. So that shows us that checkmark recovery, sharp drop, gradual going upwards. Then we take a look at our front desk activity. It's a very simple formula. If you have more inquiries, more activity, more online booking showing, more traffic on a website, that means the consumers are re-engaging. We can measure the number of transactions without looking at the activity from the front desk, from the appointment center, from the help desk. And we notice, give you a perspective of the Hallmark in 5 regions. In a 5 region, in a month of March, our highest activity was about 6,000 per week in terms of the front desk. And then the average was about 4,700. We went all the way down to about 1,000, 1,200, and now we are up about 2,100. So if you take a look at the average of the 4,600, 4,500, we are 2,100, 2,200. That shows that we are again at the 50% back ground. So the 50% threshold for us in the business is basically breaking that ice. We are now on a positive mode going up. That's our basically the threshold. So average sale price, this is interesting by OREP. Contrary to the other 2 slides, take a look at the prices. The prices, they haven't dropped. In fact, the orange graph consistently has been above the 2019. So that's what the consumers, they need to see. The prices haven't dropped and they will not drop. So we talk about the future of the prices in the next few slides. So then we take a look at also, again, the demand versus supply, and we take a look at our own number. The previous graph, this one was for the OREP. This graph is for Hallmark. If you take a look at it, the performance of the OREP is roughly across about 40%. And when you take a look at the Hallmark, it's very much consistent with actually 2 areas we are performing above and better the board, which is the freehold sales and total sales. So we are actually performing at anywhere between about 55% to about 61% right now at Remax Hallmark, specifically in Hallmark in Ottawa region. So average sales price in April. Average sales price in April is for condo is about $327,000, up by 6.3%. Average for freehold is a 5.25 almost, 6.8%. So consumers, they need to understand this. We went for 8 months of the pandemic. So you expect the prices drop. The prices hasn't dropped. And one of the reasons the prices hasn't dropped because the fundamental element of our business, which is access to cash and capital for refinancing is there. And the buyers are still solid. Yes, the buyers are cautious, but sitting on the sideline. That's why education is the most important part of the future of the 2020 to guide them through this stormy water. So take a look at also the showing time. Showing time is our front portal average in Ottawa. And it shows from April 15 rebound in activity of the showing versus if you take a look at from March 4th, almost to April 15, probably April 10th, everything was downwards. So what we call this, when we take a look at this, I like to take a look at the April 1st to maybe April 10. That's how I call it flattening the curve in real estate at bottom line. So we reached the bottom line during that week. That was the week we call it acceptance by consumers. Everything will be okay. Let's embrace it. Let's learn how we can practice safely. Let's also understand how we can re-engage as quickly as possible into the economy. So showing activity, a robust pace in the last 3 weeks, almost anywhere between 12 to 15% increase week by week. Traffic basically is back now to the first week of the January of the 2020. Why we measure it versus the January? As soon as Christmas, New Year's, historically, the first 2 weeks of the January is the slowest time in real estate industry. So we are back to that activity. We are only about 2.5 months away from the peak, which was March. Impressive bounce from being down 70% in mid-March. So from 70% mid-March, we are now back up to about 60% activity. So we gain almost about 30% momentum. So Remax Hallmark versus OREP. I want to congratulate Remax Hallmark agent in Ottawa. So I did this yesterday with Ansel, and we were shocked. So I'll give you a little bit more details of the numbers. The numbers may not be accurate because we don't have the details of our competition in terms of the exclusive listing and exclusive number of the transaction happen, but that the same thing applied to us. So we compared apple to apple, whatever we could pull from the matrix. So we pulled from the matrix. In the month of April, there was 1,001 transaction in OREP. 29.7% of them was done by Remax Hallmark. Give yourself a big round of applause. You guys are dominating 30% of the market in Ottawa. You are a big force in the Ottawa market. So now take a look at it. March of 2020, nothing happened. COVID wasn't here. We were all happy when we were doing. We were actually at 27.7. We are actually up by 2%. And one of the reasons that we are up, because we adopted as early as possible. We were the first company to shut down our offices. We were the first company to start educating and training our agent in terms of the mindset and embracing and also learning the new technology, how to adopt, how to do the safe practices. We were the first company to share all the information with our consumers. And as soon as you are ahead of the game, that's what happened. The 2% is the winning ticket for us in terms of that we are ahead of everybody else. So congratulations again to all of you. So this is shared by the RBC, and I really like it. RBC came through a projection of what's going to happen to the Canadian household, Canadian real estate market overall. As you can see, we are in the Q2 of the 2020. So we will see probably a flat or maybe gradual growth in 2020. If you want to compare it to the 2019, yes, it will be lower than 2019. And you will see a major probably rebound in a Q3, which is basically sometimes in September. Historically, the best month in real estate are May to July. Guess what's going to happen this year? Your May and July are shifted and pushed to be the fall. Basically, it will be your September, October, November. And then you will see a real rebound in the first quarter of the 2021. So impact on Ontario's economy, urban centers such as Ottawa, more consumers are spending. So you are in a very good area. You are in a robust city, 1 million people. They can't wait to go out. There will be investment happening over there. Professional and business services, they have to adopt. The one that they adopt faster, they will also grow easier and in a faster pace. Manufacture in Ontario will resurface for probably a few years, because through this pandemic, through the chain of the supply, there is a notion out there, do we have to put all of our eggs in one basket? Putting all of our eggs globally in one basket, which was the supply chain in China, didn't pay off properly. I have to be optimistic about the fact that, unfortunately, capitalist greed, in a few years, they will forget, and we will be back in the hands of Southeast Asia because of the cheap labor. But I think the Canadian market will benefit for the probably next 3 to 5 years on resurfacing of the some manufacture. Economy will resume its growth in a Q4 and into the 2021, the GDP growth, as it was predicted, anywhere between 1.2 to 1.4%. It won't happen. Probably will happen by maybe half a point. Overall, the province will lose some job in this Q2. And yes, but you got to remember, everybody keeps talking, the unemployment will be double digit, 8%, 10%. We, as a province, as overall, as a Canadian, we came into this COVID-19 with almost 5.6, 5.7 unemployment. We had already 1 million people in Canada unemployed. So don't mix the boat together. Just look at the additional people that they're going to be unemployed. So yes, we will be for a while, probably sitting anywhere between about average of 6.5 to 7.5%, but they will be reabsorbed in other job market. One of the areas that they will be reabsorbed, there was a survey was done last week from Canadian, 52% of the Canadian, they said they will love working from home and they get paid less. So you will see a shift of the employments working from home, and many companies, they want to retool themselves, streamline their services, and there will be also more employment in the technology sector. So long and short-term economy recovery for COVID-19. The economic shocks are not permanent. It's like anything else. It will have its own course that to run. If anybody going to deny it or anybody going to be pessimistic about it, that it's going to last forever, it's impossible. Historically, look at the financial crisis, look at the crisis in mid-80s when the interest rate was anywhere from 11 to 13%. Usually the worst economic crises are anywhere between a year or two. This one probably lasts about 6 to 10 months. And the only reason this one will be faster recovery because of the stimulus packages that are consistent with the global market. We are not alone in this game. I do believe eventually, yes, we are on the check mark shape recovery, but I do believe probably from a third quarter, we will be on a V shape and we will be going fast up. Low interest rate is going to be around easy minimum for about 18 months to 24 months because the Canadian government wants to encourage consumer to spend the money. There will be great sales out there from a mortgage to car purchasing to no payments, you name it. Liquidity injection will continue, but what's going to happen, the same way that they will reopen the economy, they will scale it down. And we should be thankful to the Canadian social policies. We are among the G7 countries and G20 industrial neighbors, but we have a very fundamental socialist system, which is basically protecting the consumers and protecting the Canadian. And it has demonstrated its force and power through this pandemic. So what can buyer and seller expect from the market? The first thing, adopting the new change. Your buyers and sellers, if the buyers and sellers are on this call, you have to adopt. You have to trust the Remax Hallmark agent with the system that we have placed. They will guide you through process of selling your home. We have multiple layers of the documents and system in place, how to list your home, how to showcase your home, how to market your home, how to go through the process of the showing, pretty much 75% virtually and paperless. We are investing in a paperless system across all our 5 regions to making sure everybody is consistent. Our partners from a legal to mortgage, they are adopting to that. And the reason we are doing that because we want to mitigate the risk and as much as possible, reduce the physical contact. You will see a small increase on average days on the market. It's all depend on region by region. I don't see it in Ottawa. Ottawa is a soft cushion market, which is the average price anywhere from about $450 to $650. And it's a very hot market in terms of affordability. And because your employment sector is quite strong, federal government, public sector, they have not laid off anybody. And historically, during the crisis, the government wants to provide more services because particularly in this era, everything is online. The CRA is hiring people, government services are hiring people because they want to respond to the consumer as fast as possible. Property values, I bolded in red, may fall briefly in Q2, which is this Q, and that's all depend, again, region by region, and it is a direct correlation with the unemployment rate. Watch mobility and appointment reports. That shows you the rate of re-engagement back to the economy. And it's interestingly, as soon as the government announced about the reopening of the first phase, we talked earlier about the mindset. This is not a financial crisis. This is a psychological crisis. Consumers, now they are so happy the government say, okay, let's go back to work. And you know what? Their attitude is suddenly changing. They are basically started rethinking more in a positive forward. Recovery coming in stages. Don't expect that suddenly we will be back up to normalcy that we had. No, we won't. But one thing I like to emphasize, it's interesting. In January and February of this year, consumers and us practitioners in this business, we were complaining, oh my God, we're going back to 2017. Oh my God, we don't like what's happening to the market. The market is becoming uncontrollable. The market is out of control. We are, this balloon is gonna pop and you name it. Don't you rather to be in a stable market, stable of the market of the 2016, late 2015? Guess what's gonna happen? Let's say if the prices also drop by 5%. It's not a big change. It's not a major change. It's not a 2008 in US that the house prices goes down by 30, 40%. Even our prices drop by 10%. So average price in Ottawa, we just talked about it, $500,000, 550. So it goes to 500. I'd rather to have a steady market. And if the consumers are on this call, you sell low, you buy low. There is no win. The gap is the same. You can't sell high and you just say, oh, I wait 3 years and then I buy later on. No, the market will pick up this momentum. The supply and demands are very part at each other. Lastly, the market will bounce back in Q of the 2021 because of the Canadian market in terms of immigration, in terms of the solid lending practice, in terms of the interest rate. And it's interestingly, many other countries have watched us, how nicely we came out of it in almost 8 weeks. Remember, Italy, France, many countries, Iran, China, they were in a lockdown anywhere from about 3 to 5 months. The rate of the mortality is through the roof. Look at the US. Frankly, what I feel the US is doing, I'm not a scientist, but the US is giving up. US basically is going towards the herd community, which is basically one of the countries, including England initially adopted. US is basically saying, you know what, let it go out. We got maybe about 70,000 people mortality rate. So worst case scenario will be 300,000. And the reason is, you have to think from their perspective. It's such a large country with such a complex system of the states and a two-tier health system. They don't have the social system that we have. They don't have the same unified voice that we have, okay? So every sector, every state is talking a different language. So they're just saying, okay, let's open it up and let's take the risk. But the risk is interesting, is a calculated risk, because majority of the health practitioner and researcher and scientists, they do believe we, even in Canada right now, could be 50% of us are infected, but our body is immune because has produced an antibiotic. So that's hopefully that Canada is aiming, Doc Ford is requesting for national testing and national tracing. So hopefully we will adopt that, which will be a learning curve for us for future pandemic, because this is going to be part of our normal life for maybe 20 or 30 or 50 years down the road, because it's not going to be the last one. But I think made us more than ready than ever. We had a good lesson from SARS. So we will bounce back in the market. So I'm not worried at all about it. Thank you for all being here. I'm here to answer all your questions. Thank you, Dan.
All right. Well, hold tight, Steve. So for those of you that have any questions, if you click on Manage Participants and you put your hand up, then we'll be able to ask those questions. I've got a couple that were sent to me via email that I'll read to Steve. So Steve, you're still there?
Yes, I'm here.
Okay, fantastic. So just let me look on my phone. You guys, so just for future reference, guys, you can ask the questions in the Zoom group chat, or certainly put your hand up and we'll make sure that your questions are addressed. So I have Jason Pilon that's got his hand up. So Jason, if you just bear with me here and I'll find you to unmute you. So Jason's got a question for Steve. Jason, go ahead. You should be unmuted.
Yeah. Hey, Steve. Great presentation. Thank you.
You're welcome.
So just wanted you to maybe reiterate the conversation we had yesterday about landlords and tenants, because everyone, I think it's a relevant topic right now, because everyone is getting calls from investors that potentially need to sell properties right now and are getting a lot of pushback from tenants. So maybe just reiterate a little bit of that conversation for everyone. Thanks.
You're welcome. Thank you, Jason. I'll actually talk about two things. I talk about the landlord and tenants, and also I want to share something that Jason shared with me. So Zoom calls has been part of our life for the last eight weeks. So leadership team is on Zoom call probably 10 a day, and we have a Zoom call with the incorporation. I do recall last week when I was talking to Jason, Jason said, oh yeah, we are moving. We have only maybe 2-3 transactions. And if I share, may I share? So Jason, this week, this call says 7 transactions, all multiple offer in his team, one weekend. Look at the change of the mindset and the trend of the re-engagement of the consumer. These are solid proof in our industry. These are the sample proof that you can rely on. So back to Jason's comment about the landlord and tenant. During any pandemic, multiple announcement comes out with no clarity. So initially, Doug Ford came out and just say, oh, the landlord, they got to cooperate with the tenant. And there was some petition going around that tenant shouldn't pay any rent. And it was, interestingly, some tenant actually, they were posting on the social media, it's a law by the government of the Ontario that I don't have to pay the rent for whatever foreseeable future. No. And then the government actually came out and corrected. The landlord tribunal also came and corrected. Under the lease term, you are still obligated to pay your rent if you can. The discussion around it is, if you lost your job, your landlord and you should collaborate together to come to some sort of defer payment, not waiving the payment, meaning the lease term from maybe 6 months left become 8 months. So, or meaning when you can pay maybe $200 more. So then also come the question of the showing or not showing. The tenant are saying, oh, the province said I don't have to show anything. No, it's a discussion of the safety, okay? The tenant cannot refuse the showing, but unfortunately, the landlord and tribunal is closed, it's shut down. They will not issue any or set any hearing. So probably when they open, even if there is a 10% dispute out there with the rental market, is going to be a huge delay with them. So my recommendation to you is have a conversation. Assure them, look, we protect your safety, or reach out a settlement agreement. Sometimes there is a 2 months left. You know why? How about this? We're selling this property. 2 months is left. Mr. Seller, are you willing to compromise with the tenant, give them a break so they're in exchange for the showing? You have to come up with a solution, a collaborative solution. A bully tactic will not work because we don't have, unfortunately, the power and the support from the landlord tribunal to enforce it right now. But the landlord tribunal also announced that if your tenant is in default, follow the normal procedure. File your application, file your basically form. Don't think, oh, you shouldn't worry about that. No, do all the proper steps. You can file it online too, so at least you are ahead of the other people's as soon as it's open.
Fantastic, Steve. Thank you for that. And we're getting some great comments in the chat here. So I've gotten, I'm sorry, I don't have your name. I just have Toronto-Bayview office K1's got a question.
Yeah.
So go ahead. Oh, just one moment. There we go. And your name, sorry?
He's on mute. He's not muted.
No, he's unmuted.
No, do it again. Okay.
Yes, now I'm. Hi, Steve. Thank you very much for the presentation. I just want to ask you, how do you see the market after these facility provided by the government is over, like these mortgage deferrals, these 2,000 payments for each one? They're not going to do it forever. So when it's, how do you see the market after these facilities over?
Great question, Kayvon. It's good and bad. So a good is some people that they don't need these facilities, such as mortgage deferral, they took advantage of it. And I think they took advantage of it because they're worried about the future. So have the education discussion with those clients that if they really don't do it, they shouldn't take advantage of it. Bank, they are not losing money. Rest assured, the bank, they are not losing money. The banks, Canadian banks have performed for the last 20 years very solid, very solid. You have not seen one quarter financial statement from the 5 Canadian banks with losses. Even during the 2008, the 5 Canadian major banks, they had maybe one quarter of the flat, not losses, because of the Canadian banking system, which is quite conservative. So that's number one. In terms of the 2000 help and relief fund, it will be part of the deficit. But you got to remember, Canada was and it still is the lowest deficit ratio to the total GDP growth among the G7 country. People are just laughing sometimes. They said, 800 billion, we should be proud of it. Yeah, we should be proud of it out of all the G7 countries. Some countries are over trillion in terms of their deficit. It's a nature of governing a country. It's a business practice. Let me tell you this. It's a business practice. It's a revenue versus expenses, and they run some deficit. So, and we have to acknowledge this. There is nothing to hide about this. Yes, there will be a future generation that will end up paying for it. But do you rather to save the economy from the crash and a 3 or 5 years stagnation, or do you rather future generation probably going to have a little bit of the hard time and they pay more taxes? There is no win here that, no, I want to save the future, I want to get the money, and I just want to make sure the government, make sure this thing disappear. One of the areas that is going to help us in recovery quite fast is the energy sector and oil sector. We really need to bring that one back to the full momentum, because it was a huge level of income for the Canadian economy. And interestingly, there was a 50-50 debate in terms of the pipeline, environmentalists, indigenous versus the government approach, and a Supreme Court ruling, and it's now shifted. It's shifted because they are saying, look, it is important that we get to the shore. We were not competitive in our oil system. This should have been done, to my humble opinion, 30 years ago. We have only one client, US. Oh, we sell you. We are at the mercy of one client because our transportation was what? The rail or the truck, which is ridiculous, frankly. It is, we are in an era of the technology, and we can get to the water, and we can basically put it in a tanker or the underwater pipeline, go to any country that we want to sell. This is really blocked us. And we are among the top 3 countries in terms of the natural resources globally. So, but we are not touching it. We are not untapping it. We are not taking advantage of it the way we should, because we have so many red tapes in terms of the pipeline, how should have been done. But hopefully through this COVID-19, the consumers, they will actually embrace it and support the government initiative and approach.
I'm sorry, it just, you said that somehow maybe other generation is going to pay for it, but I believe every single dollar bill is being printed by the government. It's our debt. And why next generation has to pay it? I think it's our responsibility to pay for it. And that's what I want to know, what is happening to our debt ratio here.
Well, you got to remember, Kayvon, yes, it is, but you got to remember, I'm 54 years old. If the debt is going to be for another 30 years, I probably will pay for the next 15 years of it or 20 years of it. And my kids who are younger, they will pay for the rest of it. That's my point. Next question.
All right. So Maria Roldan, very good here. Pre-COVID, the real estate market in Ottawa showed that listing inventory was low and demand was high. In your opinion, do you think that we will go back to that climate when the economy picks up?
Absolutely. Absolutely, we will go back to that. We are already in that environment. Multiple offers are happening. 7 transactions in Orleans this weekend. All 7 multiple offer. That's your best sample size. Talk to all your colleagues in your office. Either full price or 2% down or above the price. You are working on the ratio of the minus 2% above plus 5%. Yes, it will happen, because you got to remember, people are so worried about unemployment, which majority of it happen, unfortunately, in a retail and hospitality. Hospitality is the lowest category of the family income. Majority of them, they were in a rental pool. What's going to happen to our rental pool? The rental pool probably drop a little bit in terms of the increase the rate of the vacancy and drop the rate, because some of the investors, they will have the challenges in terms of the tenant that is going to negotiate the lower rent, because probably going to be more available vacancy. Ottawa doesn't have a huge pool of the vacancy of the rental. Toronto probably will see that more than Ottawa. And why I will see that Ottawa is going to be still in a really demand market, because of the affordability. Also take a look at the Ottawa's historical 50 years. 80s crisis, which was the biggest financial crisis in Canada. It wasn't a global crisis. Interest rate, and Ottawa only dropped minus 2%. Federal government is your biggest caveat over there that is going to make that economy steady. Keeps going steady.
So I think we're going to get to a point of wrap up, guys. Everybody's, I'm looking at the chat here, and there's a lot of gratitude, and for you, Steve, for bringing, a lot of information that we receive from different elements and different parties. And I think in a 40-minute or 45-minute time frame, you've been able to give us a quick, as Monica says, linear and logical explanation of what's happening in the marketplace. So I just want to take a moment again on behalf of everybody here to thank you for doing that, Steve. I think we're very blessed to have somebody that's so knowledgeable and has such interest in following the trends and what's happening in the marketplaces. And you know what, for the Ottawa people that are on the market, get ready, guys, because as Steve said, I think once we bounce back, it's going to come back very, very strong. For those that are guests that have joined us, we thank you for being here with us. And this video, as well as the slides, will be uploaded on the hub, so you'll have access to that. And thank you so much once again. Oh, actually, there was one other question, Steve. As far as the offices actually opening, I know we've had some discussions about that. So there was one question about timeline.
So we are aiming for May 19 after the Victoria Day weekend. We feel that either between that day or June 1st, don't hold me to it. It's subject to basically making sure the next 2 weeks, everything goes smoothly. And also subject that we need to make sure that we prepare our environment ready for you guys. How are we going to prepare our environment for you? We have placed a plexiglass order that should be installed for all of our offices as of next week. We have ordered the proper sanitizer and mask for our staff. We have provided you with the agent tool kit that you can order for yourself. We are finishing a manual, a booklet of the practicing during the COVID-19 inside your offices, how it should be done. We need to be ready. We don't want to rush a week early, and if you're not ready. So May 19th to June 1st, the latest will be June 1st, and the offices, they are all not going to be open at the same time. We will open a bunch of them, and then we will roll out this second phase and third phase. But the first phase Whatever offices we're going to be open, it's going to be 9 to 5. We are scaling up our help desk. And some people ask this question, why the help desk? Why not the staff bringing out to the branches? My Hallmark leadership #1 responsibility is the health of the staff, agents, and their client. I have a very controlled environment at our head office at the Frank. I know what is happening there. I know the door is locked. I know they are not interacting with other people. I know their safety. We have done that test for the last almost 7 weeks. Knock on the wood, no health issues across 1,700 agents of the Hallmark in all 5 regions. We have nothing, nada. And we want to keep it that way. So that's why we're going to bring 1 staff to the branch and in a very, very controlled environment. And we really appreciate you guys that you really follow the rules. If you jeopardize that environment, you are risking yourself, your family, the rest of the colleague, and it could be a massive blow for that in office, because then we have to shut it down completely and go through retooling and re-engaging process one more time. My last advice for all of you guys has been this: educate, educate, communicate with the consumers. Please use our resources. Remax Hallmark Hub, the videos that we do for the market, share it with them. Please forget about too much. I'm going to be very transparent with you. Branding this and that. We are all in it together. Our logo has been always, we are Hallmark. Doesn't matter. Bill Meyer has a good clip. Jason has a good clip. Nim has a good clip. Ray Smiley has a good clip. Share it. Doesn't matter. At all doesn't matter. I am using this assistance of many people in your region in terms of the data and everything. They are supporting me with the information, and we brainstorm it together. So if you have also an idea, share it with us. We gladly embrace it, research it, and if we can implement it, we will implement it. Have a wonderful day. Stay safe and stay healthy, and go sell some beautiful houses, because you are the best in the market.
Fantastic. Thank you so much, Steve. And thank you all for being here. Have a great week.